So, thank you very much for the introduction, and thank you very much for the opportunity to be here today and to share my views on fintech. That's what this day is about, and give you some insights on ayondo and how we tackle fintech. So, seems to be conference week because I've just come back from another conference in San Francisco this lunchtime, and it was very interesting. I'd like to share a couple of things with you because this was the UBS Global Tech Conference, and there were around 100 global companies present and several hundred of investors sharing views on all aspects of technology, also financial technology, lots of opinion leaders from different industries. Very interesting event. And I took away 3 key messages from that event. One is that companies are looking to take technology in-house again. So there's less and less reliance on third-party providers. So people are actually developing the technology themselves or buying providers to have complete control over the entire value chain, because the marketplace has become more and more competitive, and companies want to react faster to the changing environment, so they're taking the technology in-house again. So this is one trend. The second one, of course, everybody would expect that is mobile. Everything goes mobile across the board. So one number I took away is that it's estimated that by 2019, 55% of all online advertising is going to be deployed on a mobile device, so smartphone, tablet, whatever, 55%. So huge growth in that area. And the third one is actually there's a lot of, you probably don't want to hear this, but there's a lot of growing skepticism on fintech, because valuations have ballooned quite a lot, and there's an opinion that there are signs of a bubble in the fintech space. And there's actually some evidence in the US currently where you have capital rounds, private capital rounds at valuation X, and you have the IPO 6 months later at valuation Y, and Y is typically 40 to 50% lower than X. So that has happened now on several occasions in the US on multi-billion-dollar IPOs in the fintech space. So that's a sign that maybe the sky is not that blue anymore on the fintech side. There are lots of clouds. And I think there's going to be, the next couple of years, there's going to be a lot of, let's say, proof of the business models, because the money won't be around that easily anymore. That, at least the impression I get from talking to investors at that conference. So I thought, it's interesting news I would like to share with you. And actually, there was a fourth trend, because nobody was using slides for the presentations. And if anything, they used 1 or 2 slides with the key messages. So I thought I'd take an example, and I brought only 2 slides for you today to make it very easy, so you can follow it very nicely. So, how did ayondo start, basically? My founding partner, Thomas Winkler, who is also here today, and we founded the company early 2009 with the view that the internet would change finance significantly. Like the internet has changed a lot of other industries beforehand, like commerce. The way you buy consumer goods has changed significantly. Books, shoes, everything you buy mostly over the internet. So the whole media space has changed significantly over the last few years, and we anticipated that finance would change dramatically as well, but at a much slower pace. And why is that happening? Because obviously you're not just selling consumer goods, you're selling financial products. Financial products is a regulated space. So there are limits how you can design your product, how you can market your product, because there's regulation. And this is actually a challenge. I guess that's probably, we're going to talk about this later on at the discussion, the podium discussion. There's a challenge because there's a traditional regulatory framework, and there's new companies around with new business models, and they don't fit into the traditional framework. So I think it needs a lot of discussing and adapting from all sides to make it fit. But for a market to grow sustainably over the years, there has to be regulation. It's extremely important, and people have to understand that. So when we started to invest, we started actually the company as an investment company. So we started to invest in companies with interesting business model in the area of fintech. And after some time, we thought, okay, we fell in love with our portfolio, and we thought, let's build a financial services provider with unique offerings. And we restructured the company and then renamed the company into ayondo. And we are operating now for the last couple of years as an operational holding company. And we are basically offering two major services. One being a brokerage platform, which is Ayondo Markets, and that's done out of London. It's an FCA-regulated entity. And this broker serves as the exclusive execution venue for all ayondo products. Our second core product is social trading, which I'm going to explain in a second a little bit in more detail, because some of you might not know it. This is run here out of Frankfurt. We offer these services as a B2C service under the Ayondo brand, so we do direct marketing to the retail customer, and we can do that wherever we have got a license to do so. But we also offer a B2B2C product, so we are white labeling our platform. So that is a way, obviously, where you could operate with partners who hold the licenses in specific countries. And that's a way to grow quicker, because you can grow simultaneously in several countries, whereas you couldn't do that, or you would need immense amounts of capital to roll out the product in 5 countries at the same time. So we have chosen to do that in a partner model. We have just launched our first partnership, our first JV in Singapore a couple of weeks ago. So that's our first step into Asia. Obviously here in Germany, this is our home turf. We have now reached market leadership with market share of in the high 30% in social trading. And obviously it's our ambition to keep that position for the foreseeable future. So how does social trading work? Social trading, if you visit our website, www.ayondo.com, you will find a community of market experts. We call them top traders. And you can, basically these top traders are building a track record on our platform and publish their track records. So they become very visible to everybody. So you as an investor, you can join, you can look at our website, and you can actually watch these experts trading in the marketplace or investing in the marketplace. So you can do two things. You can either just learn from them, you can watch them, no problem, you learn from them, and you might want to execute the trades yourself with another platform, with your house bank, whoever you want. Or if you want to exploit the full power of the service, you will open an account with our broker, Ayondo Markets. You will go through a KYC process, and you will go through a MiFID-compliant KYC process. And if you're suitable to use the product, you will be allowed to open an account. And once you've got the account open, you can choose several traders, one trader or several traders, drag them into your portfolio. You can push the auto execution button, and from the moment you push the button, you will execute every transaction, every trade these traders are doing simultaneously in your account, real time and also proportionate. So no matter what size the trader is trading, no matter what size your account is, it will all be broken down into your size. So from that time, you actually start to build exactly the same equity curve as the traders you are following. So it's quite an innovative model, and that's using the power of sharing information, the power of the internet to actually improve your investment behavior. And we have got that power because, coming back to my initial statement where I said people are looking to get technology back under control, we have done that. We have developed all technology ourselves. So the brokerage platform, the social trading platform, the customer relationship management tool, all these segments from front to back, we have all developed ourselves, we own ourselves, so we can actually shape the product the way we want it. So we have got power on the product design, on the pricing. We are independent of the traditional financial institutions. And that's the key here. If you control the entire value chain, you can truly disintermediate the market, but you have to have the control over the entire value chain. So that's what I believe we have done right at ayondo, and that's what gives us a very scalable solution, and a very powerful solution which we can share with partners on a global basis. So what is actually, can we go to the next slide? I don't know who's changing. Is it here? How does it work? Okay. So this is the reason why we actually started ayondo many years ago, because we felt there were a lot of unhappy customers. A lot of unhappy customers because frustrated maybe with the traditional banks, not a lot of innovation. Over years, the same kind of models, the same fee structures, and so on and so on. And that was actually inspiration for Thomas and myself to start ayondo. And our ambition, that's our mission statement, we want to give tools and resources to our customers to make them happy. So that's what we want, happy customer. Okay, and that is absolutely key. If you control the entire value chain, at least you've got a chance to make the transition. Happy customers, that's what we want, right? Happy customers stick with you, and happy customers will refer you to your friend, and so on. So maybe, everybody has to find out, whether social trading is for them. So you can visit our page and find out for yourself, but I just want to share a couple of numbers with you. One is, people might ask, what is the added value of social trading? So the added value, there's a few things. One is obviously the educational aspect, so people are learning about financial markets, because you don't have to do it with real money, you can do it with virtual money. You don't have to spend money with us, you can just learn from using our platform. But if you want to go for real, there's also actually statistical evidence that you can be more successful than using other financial products. And that's, in the end, is the key if you want to build a sustainable product and if you want to be successful over the years. And I strongly believe that social trading has got the power, the potential to become an alternative asset class at some point in time, where people say, well, I allocate 5% of my money into social trading. Why not? And that's what we are working for. That's what we believe is possible. If you look at our top traders, in 2014, the top 10 people in terms of assets under management, they yielded 8.2% for the investors. 8.2% in 2014 It's very good, because in 2014, the Dow Jones was yielding 7.7%, and the global hedge fund index was yielding 2.2%. So there was an outperformance against other asset classes. And to give you, an idea about the scalability of our product, in January 2013, we were executing 70,000 transactions, so trades on our platform. And last month, in October this year, we executed 3.3 million transactions in 1 month. So this is an increase of 4,500%. And this is the message here. You can only do that if you have power over the technology, you have control over the entire value chain, and you create happy customers. And because I'm running out of time now, I guess 15 minutes are over. I would like to thank you for listening to my speech. And I hope there's going to be some questions now or later. I'm going to be around all afternoon. Thank you very much.
Yeah, thank you as well.